Welcome to the Wealth Studying Podcast. This is episode 527. Today is July 19th, 2026. I'm your host, John Pugliano. I'm also the founder, money manager at investablewealth.com. Hey, today I got a real quick episode for you. I just wanted to mention that I did sell some stocks on Friday. I put out a blog post about that. You can go there to read the particulars of what stocks I sold. I just want to give some background and clarification on it. And the reason I sold had to do, primarily with the escalation with what's going on in Iran and the Strait of Hormuz. But I do want to clarify, this is not a panic sell. It's actually just taking advantage of a target of opportunity. I'll get into all that in a second. I do want to mention the blog post on this just went out. If you're on the free blog post notification email list, you will be receiving that. Be patient. It takes a little while to propagate. If you don't see it in your inbox, check your spam folder. If it's not there, shoot me an email and I'll confirm that you're on the list. And again, usually these things just get stuck in spam folders. In any case, everything is archived at investablewealth.com under that blog and notification tab, so you can always go read it there. Now, as far as selling some positions, again, I want to reiterate here, this is not panic selling. This is simply closing out some non-core positions. And the reason I sold them this week, and this has to do with the way things happen during a conflict, and this is really what I want to review with you in this episode, about seeing the pattern, about how things tend to play out with a conflict in the Middle East or other similar type geopolitical issues. Here's the simple playbook that we see occur over and over again whenever we have these geopolitical issues, and especially when something flares up in the Middle East. The price of oil goes up. That impacts not only oil company stocks, but things associated with oil company stocks and other petrochemical type products. That's number one. Number two, there's a flight to safety. It's called the safety trade or the risk off trade. So things like consumer staples and medical or healthcare products, those companies start to see an appreciation in their price. And of course, there's a sell-off in other stocks that are considered more risky, or the growth type stocks. So what you see over and over again is this rotation. It goes from risk on to risk off. Oil goes up, consumer product type companies go up, consumer staples go up, healthcare, medical companies, their stock prices generally go up, and other things in the stock market go down. And then as soon or even before the matter even gets resolved, the exact opposite happens. The safety trade comes off, meaning things like oil sell off, or the consumer staples or the healthcare companies. Profits are taken in those companies, and those profits are moved back into the growth category. Then generally go on to put in new record highs. We see this over and over and over again. And although I can't predict the future, it looks to me like we're seeing the same thing right now. And so I'm viewing this as an opportunity to get rid of stocks that I want to get out of anyways because they're not core to my overall holdings. And I see this as good a time as any to sell them. So I was trying to take advantage of these things bouncing up in a crisis, again, where things are going up because of their association with oil stocks or the safety trade or the risk off trade. So these consumer staples and healthcare type companies. Again, I don't think any of them really got a big bounce back in March and April, as this is all rekindling with Iran. These stocks are just not bouncing to the level I'd like to see, and since I really don't want to own them long-term anyways, that's why I'm getting out of them at this point. Some have been profitable, some have not, but in any case, they just don't fit my overall portfolio. So I used this opportunity to sell them. And then by raising this cash, I'm simply putting it in a money market fund. This is where I've been parking my money since, going back a few months ago when I started selling some positions. I'm raising this capital. It'll sit there. It'll collect a dividend. And if things do get worse because of the conflict in Iran, then I will go in. I will buy the dip. I'm going to use any dip to deploy this capital. And if things don't get worse, then again, I will just bide my time and look at the right opportunity to reinvest and or take on new positions. But I'm going to continue to focus on this overall industrial technology sector. I think regardless of the headlines that are worried about AI bubbles and circular investing and all these other things, I'm not worried about that because I am not investing in things like OpenAI or Anthropic or proposed data centers that are going to be in outer space. That's not what is in my core portfolio. I see the overall industrial technology as a sector that's going to continue to grow. And so therefore, I'm going to continue investing in those stocks. And I particularly want to buy them whenever everybody's panicked and there's a dip. Now, one final thought on Iran and how it could potentially get worse before it gets better. And this has to do with not necessarily a full invasion or boots on the ground, because I don't think we're going to try and occupy Iran like we did Iraq. But there could be some elements of boots on the ground, whether it be special forces or Marine Expeditionary Forces. And what I find interesting about what's going on in Hormuz right now and the possibility of an invasion of Kharg Island, this is where 90% of Iran's crude oil is exported out of. That would seem like the natural choke point that the U.S. would want to interdict. And while that can be done with air and sea power to some degree, especially if you're going to hold ground, you have to have troops on the ground. Well, we would likely do that with a Marine Expeditionary Force. And going, back to April, the USS Boxer, which is one of the ships that supports the Marine Expeditionary Forces, that was headed to and was supposed to be in that theater of war. But it had mechanical issues, so it couldn't deploy right away. And because it got delayed, it had literally just gotten into the Persian Gulf area, like right around June 30th or July 1st, somewhere in that time frame. The important part about that ship is that it has the amphibious well bays that are used to deploy the Marines when they actually hit the beach. Prior to that, the expeditionary force that was there was the USS Tripoli. And while it is a Marine Expeditionary Force, it doesn't have the necessary structure of the ship to launch an amphibious assault. It's providing close air support. It's effectively a small, nimble Lightning aircraft carrier. And the Boxer had been scheduled, like I say, in April timeframe to be there to further support the Tripoli. But because of the mechanical issues, the USS Boxer never got there. Now the Tripoli has pulled back. I believe it's moved into the Indian Ocean. But the USS Boxer is in place, and those Marines on board are fully capable to do an amphibious assault landing and take Kharg Island if necessary. That could create some major panic. I can see the headlines about boots on the ground. And if that were the case, I personally would see that as a major, major buying opportunity. I mean, this would be like buy Felicia. You'll have to wait and see what happens. Until then, as always, John Pugliano wishing you the very best returns.